Hello, beautiful people. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm so excited to be with you here this morning as we are going to be taking another fresh new look at the financial market. My own name is Sheriff Daramola, and for the next 30-40 minutes we will be delving into the financial landscape, of course from a technical standpoint, using our basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action today. And today promises to be an interesting one, of course, as we all looking forward to the publication of the FOMC meeting minutes, which of course has a tendency of giving us an insight into the Federal Reserve's monetary policy cycle for the year 2024. And of course everyone is looking forward to it to see what things are going to be looking like, and if we are going to be buying the US dollar or disposing it for other assets. So stay tuned in as I have quite some interesting and simple trading setup that we will be using to strategically position ourselves for the next move. So far this week we have been monitoring three financial assets, which includes the USOILSPOT, the USDJPY, and of course the XAUUSD. We've done pretty well this week so far. The XAUUSD has done very well. The USDJPY though has been struggling, though we really have not gained any momentum, but thank goodness we are not in a loss on that particular asset for this week at all. And on the USOILSPOT, we're doing very well too as well. So we are going to be looking at how our positions are, how we are going to be managing our existing positions, while we also look at the historical data, the current historical data, to understand the market dynamics and using this information to position ourselves for the next move. So I encourage us all to stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. And for those of you who are joining us for the first time, you are highly welcome on board. I'm always excited to have newcomers in the house, and I know that you will be wondering, what is this all about? What is it that we are doing on the Forex Morning Mastery? Well, I usually share a couple of videos during the course of the weekend where I detail my thought process and what my plans are on all the assets we are looking at for this week. And the Forex Morning Mastery was born out of the necessity of doing live follow-up details on this particular asset. So as a result of this, and of course as technical traders, we usually gather here every day in coming together as a community, of course, and engage in follow-ups and reviews of our current trading positions in preparation of both the London and the New York session. This happens on a daily basis, 8:05 a.m. UTC, 9:05 a.m. West African time, and I recommend that you stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. And it's also important for you to note that my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. And the more time you spend with us here, the better you will become at comprehending our analytical approach, utilizing the information here to enhance your own trading decisions and strategies. So once again, I welcome you on board and encourage you to actively engage in the comment section. And please, before we go ahead, I really appreciate you to give this video a thumbs up. Your likes are very valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial. Thank you very much as you do so. And with that being said, we will be diving right into the business. But before I go, a quick reminder that the Forex Morning Mastery, during the course of the Forex Morning Mastery, we only focus on the 1 hour time frame due to the limited time I have. So if you want to have a detailed understanding of how we got to the structures you will be seeing on the 1 hour time frame, I already dropped down analysis on all of these assets. You can find the links right in the description box of this video you're watching, so you can check them out after the live session, so that you can have a background knowledge of how we got to this point. So with that being said, here we will be diving right into the business, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that is likely going to be influencing the market sentiment today. And based on the asset we have been monitoring since the beginning of the week, we have been focusing on economic features from both the United States and the Japanese economy. This week isn't laced with bunch of high impactful events, so we had to include the mid-tier economic features so that we can have a broader view into what market participants will be looking at to make any decisions for this week. Now, right here on the economic calendar, we have a couple of event which has happened during the course of the week. Very important one, of course. From the Japanese economy, we had the merchandise trade balance total, which we were anticipating yesterday, and of course this data here, market were expecting a deficit of 1,925 billion as against the previous month, which was at 68.9 billion, but the figures came in beyond expectations actually, but still on the deficit side of the portfolio, as the actual figure came in at a deficit of 1,758 billion in trade balance. So it's still not on the positive side of the portfolio. It's a trade deficit, which is not really impressive at all. However, we are going to be looking at how the market had reacted to that, because I'm beginning to see some demand zone on the USDJPY, which could incite some new trading opportunity for the US dollar, and of course we will be looking at that in a moment, so stay tuned in on that one. Now for today, Wednesday, February 21st, we will be looking forward to the US economic features, and the most important one here is the FOMC minute, which is going to be coming in about 11 hours from now. So we have a lot of time to position ourselves for that particular event. And for those of you who wouldn't know what the FOMC minute is all about, well, the minute provides us an insight into the discussions and decisions made by the Federal Reserve regarding monetary policies, including interest rates, of course. And this minute is crucial to market participants' decision because they offer clues about the future direction of interest rates, which can significantly impact the value of the US dollar. Now, since last week, ever since the US CPI data came in beyond expectation, we had the idea that inflation is still very sticky in the United States economy, and this has further incited the idea that interest rate will remain high for an extended period of time, hereby knocking off the expectations of interest rate cuts in the month of March. So market participants are now looking at May and June for the first interest rate cut for this year. However, on last week Friday, we saw the retail sales data which came in below expectations, hereby giving a mixed reaction in the market right now, where some participants are saying that interest rate is likely going to come in next month, and some are even saying that it's going to be in the month of May stroke June. So now within this dichotomy, we are caught within a limbo right now, not knowing where the wave is going to fall to. So as a result of this, market participant will definitely want to see what the FOMC minute is all about, and of course we know that they will be giving us an insight into the easing cycle in that regard. So this is one event everyone is looking forward to. Now, besides the FOMC, and even before the FOMC, we are going to be looking forward to some speeches today. We have one from who is this, please? Hold on a second, please. So we have speeches from Bostic. Bostic is a Fed official and is the president and CEO of the Federal Reserve Bank of Atlanta, and one interesting thing about it is also a voting member of the FOMC, right? Then we also have Bowman, Mickey Bowman, who is an attorney and of course the governor of the Federal Reserve Board. She's also a member of the FOMC too as well, which makes whatever they say here today have some weight, and whatever they say of course will give us an insight into the the Fed monetary policy stance, economic outlook, and potential future policy action. So the anticipation of these speeches can significantly impact market sentiment as well. So we will be looking forward to this event, so I would encourage us all to mark the timing on our calendar so that we can be right on point when these events are finally happening. So as technical traders, we will be sniffing through the current market structure to identify patterns and structures that we will be using to position ourselves strategically for the next move. So I encourage us all to stay tuned in. So the first asset we will be taking on this morning is going to be the USOILSPOT, and in fact in the last 24 hours we've done pretty well on this particular asset. As you will see, price action has been dropping to the downside, and during this morning when I was dropping my commentary on the TradingView and Telegram platform, I did added another level at the $77 area where we will be adding more sell positions. And of course in the last couple of hours you will see price action has just broken down that structure again, adding one more sell positions to the other two we had prior to this morning. So we should be having a minimum of 3 sell positions running in profit at this particular point in time. And for those of us who capitalize on this opportunity since yesterday, the first sell position is running with about 140 pips in profit, while the second sell position is running with about 105, giving us over 200 plus pips in profit, while the third position is currently running with about 47 pips in profit. So we are heading towards 300 pips as at the third day of the week, which is not bad at all. And for those of us who capitalize on this opportunity, well done, and kudos to you for being on standby to capitalize on this move. And for the sake of those who are not part of our live sessions on Monday and Tuesday, let's quickly run through what really happened at the beginning of the week and what led to the decisions that made us to sell this asset. Remember, we were buying this asset at the beginning of the week after citing a range where the new week started with a consolidation phase where price action was trapped within the $78 area and the $77.60 level to emphasize the prevailing uncertainty in this market at that particular point in time. And coupled with the fact that price action was trading above the ascending trend line we identified on Monday on the higher time frame, it made quite a lot of sense for us to position ourselves at the breakout of the resistant line of that range at the $78 area, and this was exactly what we did. We had a buy stop order above that structure. We saw the buy position triggered, and in fact price action moved over 50 pips thereabout before it went into a consolidation phase. And if you remember vividly, I said on Monday that due to the observation of the public holiday in the United States, we might be seeing subdued trading activities, which may lead into price going through an extended sideways movement. And that was exactly what happened on Monday. We saw how price extended the range into that $78.50 level and the $78 area. Now on Tuesday, we begin to notice that buyers were finding it difficult to break out of the key level for the week at the $78.50 level, as you will see right here. And you know how we use our key levels in this community. As long as price remains below the key level, we obviously want to be looking out for patterns and structures that support the idea of selling that asset. Now, with this in mind, I did mention here yesterday that we are not going to be selling unless the key level at the $78.50 level is, we are not going to be buying unless the key level at the $78.50 level is broken to the upside. And of course, that never happens, hereby negating any idea of considering buying this asset. So we had this ascending trend line marked out yesterday. We said if this ascending trend line is breached to the downside, we are going to be selling. And of course, we use this level at the $78 area as a yardstick to guide selling opportunities. And I mentioned and emphasized that as long as price remains below the structure, we will be selling this particular asset. And if you remember vividly, I said that I missed out on this breakdown of the structure, and for those of us who missed out, that we should wait and see if the market will give us a second chance, but like a retest of the structure. So with a sell limit order around that area, we capitalize on the downtrend move, and since that moment we have been selling, adding more positions at very important levels that we identified, the $77.60 area, and of course this morning we included the $77 area to maximize the potential of this bearish move. And for those of us who capitalized on this opportunity, well done and kudos to you for being on standby to capitalize on this move. So as it is right now, it is very, very important that we move all our stop losses accordingly and secure this current sell position, as anything could happen as soon as especially when we look forward to some couple of speeches from the Fed Reserve officials, and of course the the FOMC minute, which is going to be published later today. So let's move all stop losses, and I think since we are going to be giving enough breathing space for price action to move around, I will be suggesting that around our third entry area seems most appropriate to move all stop losses to. Please remember to always give enough breathing space for price action to move around. Now, with a well secured position at this juncture, what is going to be our plans for today? Well, it's also very important to understand the psychology of this current market dynamics. Remember, since the beginning of the month of February, price action had consistently found higher highs and higher lows as price of oil continued to surge into that $78 area. And I'm of the opinion that the current bearish momentum we are looking at this point in time may be as a result of profit-taking activities, as those who bought at a cheap price will probably want to be taking some profit off the chart, as everyone looks forward to the event today. We have the EIA crude oil stock change report, which is coming up later today, and we also have the API weekly crude oil stock, which is coming up tomorrow. So this data here, majority are looking forward to seeing what that will bring. So let's take some profit off the chart and let's see what that event will bring, and that will decide if we will continue selling or buying. So I think that is the thinking process in the market right now, resulting in this bearish momentum we have. Now, for the sake of clarity, let me just quickly show you what things are looking like on the 4 hours time frame, where we consider the nature of price action since the beginning of this month. Now, looking at the 4 hours time frame, you will see here that price action had consistently found higher highs and higher lows, giving us this beautiful ascending trend line to work with. So this is the trend line that has supported the bullish momentum throughout the course of this month. And like I said earlier, the breakdown of this ascending trend line may be as a result of profit-taking activities, as those who bought at a cheap price somewhere around the $72 area may try to take some profit off the charts, at least take advantage of that differential in price of when they bought and where price was at the beginning of this week. So the question now is, how far will this bearish momentum go? Well, we do not know how far it's going to go, but we are going to be marking out levels that we will be using to strategically position ourselves for the next move. So we have the $76.50 level. For those of you who were part of our live session on Monday, you are familiar with this level. So I have a sell stop order below that structure, which actually has been triggered at this point in time. So let's see how far this momentum will go. So to guide our trading activity for today, we have this descending trend line, which has been supporting the bearish momentum since the beginning of the week. Now, you know how we use our descending trend line. As long as price remains below the descending trend line, we shall feel comfortable in our sell position. So let's continue to use this trend line to guide our trading decisions going forward. Now, the only condition that will make us to buy this asset at this point in time is for this descending trend line to be broken to the upside, breached and broken to the upside. Only then can we start considering buying this asset, because a breakout of the trend line will be a beautiful sign that the trend line may no longer have the capacity to continue to negate the bullish attempt. Hence, buying above that structure makes quite a lot of sense. Now, there are two ways to which we can buy this asset. For those of you who have been with me for a while, you're familiar with this. So for those of us who are part of this profitable journey so far, you can easily place a buy stop order above the $77 area to capitalize on that move, simply because we can still leverage on the profit we had made so far this week to test waters and see if that buy position will work out. And if it doesn't work out, we know that we are only risking some of the profit we made so far this week. However, if you are new with us and you don't have any profit to leverage on at this point in time, I encourage you to remain patient and wait for the breakout retest of the structure before jumping into any positions here. So this is my simple view here, and if anything new comes up, I will definitely give you updates on both my trading view and Telegram platform in that regard. So let's see how the market will play out. But one thing I do know is that today's focus will be on the release of the FOMC minute, which could offer valuable insight into the potential path of interest rate cuts and the current policy stance of the Federal Reserve. Now, this development have a potential to significantly influence this asset today, so we are going to be very, very careful as we have our positions running. We will be moving our stop losses accordingly to secure positions and ensure that we have our profits secured, so that if any volatility comes in or price moves in the opposite direction, we get taken out quickly on the positive side of our portfolio. So if there's anything, I will let you know in the comment section of both my trading view and Telegram platform. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds off to see if there are any questions before we move on to the next asset on our watch list. And please do not forget to click on the like button. We have over 10 people on board right now, and we only have 2 likes. Please, this is the only and cheapest way you can support this channel. Thank you very much as you do so. All right. So, in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. Stay tuned in. So the next asset on our watch list for today is my USDJPY, and what an interesting situation we have on the chart right now. In fact, all the sell positions from yesterday have been closed. Remember, I did an update on the USDJPY later in the evening yesterday, informing us all to secure all the current sell positions as we begin to notice buy traction around the 149.870 and the 149.680. And if you had done that appropriately, you must have been taking out of all the sell positions there yesterday with some small size of profit from, I think, 3 positions at that particular point in time. And well done, and kudos to you for being on standby to capitalize and manage these positions. Now I'm beginning to suspect some interesting development happening here in the last let's say 18 hours, has the failure of sellers to breach the zone around the 149.870 and the 149.680 area is giving me signs that buyers may likely be taking over this market anytime soon. Now, if we go to as far back as Thursday's trading session from last week, you will see how that area had played a major role in negating all attempt by the sellers to break through that particular area. The same thing happened here on Thursday. We saw what happened here at the beginning of this week too as well, and during yesterday's trading session we saw another buy pressure resume from that area despite that strong bearish momentum. And during the Asian session this morning, we also saw another buy pressure resume from that particular area, making this area a strong and robust demand zone, at least in the meantime. And the inability of sellers to break through the structure, for me, is a sign that buyers may likely be taking over this market anytime soon, especially when the US Treasury bond yield is witnessing some uptick movement in value and in the last 12 hours or so. And you know how the US Treasury bond yield and the US dollar are directly proportional. When the US Treasury bond yield rises, the dollar also follows suit, and if it drops, the dollar too follows suit. And since the US Treasury bond yield is doing very well, recovering at this point in time, I think this would also affect the US dollar, hereby giving us an opportunity to capitalize on an uptrend. Now, what I did this morning was to inform us that we are going to be buying at the breakout of the 150.100, which I illustrated with that arrow. And if you had followed suit, you must have had a buy position triggered at this point in time, which is currently running with about 8 to 9 pips in profit at this particular point in time. And please ensure your stop losses are way below this support line here at the 149.875, giving enough breathing space for price action to move around, because we might likely see some volatility ahead of these Fed speeches and of course the FOMC minutes coming up later today. So on the USDJPY for today, I'm holding on to a bullish bias right here and looking out for more opportunities at the breakout of the 150.285, and finally at the highest point for this week, which is at the 150.450 area, to maximize the potential of this bullish move. So let's see how the price is going to play out going forward. If there's any development, I will let you know in due time on both my TradingView and Telegram platform. Now, in as much as we're looking out for buying opportunities on this asset, we cannot ignore the potentials that sellers can also come in. Remember, the Japanese yen has been witnessing some hawkish remarks from that particular economy to support the yen. We had some verbal signal that the Bank of Japan is ready to intervene in the market if the value continues to drop. We also had hawkish remark from the Bank of Japan's governor Ueda, who mentioned the willingness of the Bank of Japan to pivot from their current ultra loose monetary policy as early as the month of March/April. And then we also I think that is majorly what we've had so far. But one thing that could be a clog in the wheel is the technical recession Japanese economy is right now. Remember, we had the GDP report from last week, which stated that the economy contracted by 3.3%, and the previous quarter too as well, it also contracted. And technically, when an economy contracts when an economy contracts consecutively, it's sign that it's technically going into a recession, and this could be a clog in the wheel, and of course favoring the US dollar as well. And if we take this factor into consideration, and considering that we are within and above a demand zone which has been negating all attempt by the sellers to break through, well, all signal is screaming bullish at this point in time. But if anything like a breakdown of the structure happen, we may likely see a sell-off in this market. And now, what do we want to see on this chart that will make us feel comfortable selling this particular asset? Well, first of all, I would like to see price drop below the 149.875 before I can start considering selling. And remember, we are not going to be selling right away, as we will need some confirmations to happen, like a retest of the structure that was broken, and continue selling pressure below the structure, which further will emphasize that buyers are not finding it difficult to stay afloat of the 149.875 before we can actually join a decline to the downside. And if price goes ahead to break down the 159.600, we will be adding more sell position to our existing trade. But I doubt if that will happen today. But if it does happen, let's be on standby to capitalize on that move. So this is my simple view on the USDJPY. I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions, feel free to let me know in the comment section. So I will be taking the next 5-10 seconds off to see if there are any questions before we move on to the final asset on our watch list for today. All right. So I can see a comment here from CIS. I hope I think okay, CIS. So it says here that please, those who couldn't place buy orders before the breakout, should we wait for a possible retest of structure, or can we enter now? Well, um yes, reasonably, if we look at this from a technical standpoint, it makes quite a lot of sense to look out for a retest of structure before jumping into that uptrend move. However, I don't know what your portfolio is like. I don't know what your risk is like. I don't know what your intended position sizing is going to be like, and I don't know the kind of trader you are. Are you a day trader, positional trader, scalper? These are all parameters and conditions that can affect and influence how you will position yourself for these opportunities. So what I simply do here during the Forex Morning Mastery is to give you an idea of where and how we are going to enter if a buy or sell position. So that's what I'm actually doing. Now it now depends on who you really are you a scalper or not? Now let me give, for instance, if you are a scalper now, for instance, and a scalper looks for, let's say, 15, 20, 30, 40 pips TP target at least. Now if we look at, let's say, from here to this area is about 30 pips thereabout. So this is something that a scalper looks out for, right? So if this is what you're looking out for, then you can easily buy here and put your TP target around this area to capitalize on that move, and then your stop loss should be maybe around 10 pips thereabout, 15 pips, depending on what you normally do. So you have a stop loss like this. However, if you are like a swing trader like me, well, you can have your entry around here and then have your stop loss around here and have your TP target way above the structure. So this is why it is very subjective what your entry point is going to look like. So what I simply do here is to try to give us an idea of what to look out for, where and how we want to take advantage of any opportunity when it presents itself. So it depends on who you are anyway. So it depends on where you are coming from and what kind of trader you are. So if you are a scalper, you can easily join right now and then take advantage of the move into the nearest high that you can see on the chart. And if you are a swing trader, you might want to exercise patience and wait for a retest of structure to happen before you jump into any position. So this is my view here. I hope I made myself clear. CIS, please give me your feedback in the comment section. Jonah Aruna, good morning to you. Glad to have you around with us this morning. I'm only seeing 3 likes and we have over 10 people on board. Please, I would really appreciate your support. Give the video a like, and it means a lot to me. Please and thank you very much as you do so. It doesn't cost you anything. Just click on that like button and there we go. Thank you very much, guys, as you do so. So with that being said, here we will be moving right into the final asset on our watch list for today. Alright, so the final asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. And we just had a sell position triggered about 15 minutes ago. I hope you caught that move right there. Let's quickly run through what has really happened on this asset since the beginning of the week and what led to the decisions we made. So at the beginning of the week, it was well noted that the week started on a strong bullish note, as we saw price started somewhere around the $2010.50 level, and then we saw price rise all the way into the $2,023 area before buyers begin to see barrier around that area, resulting in a retracement of that impulsive leg that started at the beginning of the week. Now, we had some couple of factors here at the beginning of the week that we said we will be using to guide our trading decisions, and one of them is the descending trend line we projected on the higher time frame. And for those of you who watch my weekend video on this asset, you will be familiar with the scoring structure. So we saw price action break out of that descending trend line, giving us a beautiful signal that price is likely going to be continuing the momentum to the upside. Now, the other factor that further buttressed the bullish momentum was the connection of the series of higher lows since last week Wednesday, giving us this beautiful ascending trend line to work with. And as long as price action remains above both of these trend lines, it makes quite a lot of sense for us to look out for patterns and structures that support the idea of buying this asset. Now, with this information in mind, what we did on Monday was to position ourselves around that confluence here that was between the 2015 and the $2010 area, where we said we want to be having a buy limit order maybe at the 2015 and at the $2010 50-cent level, and we only saw that of the $2015 area triggered, and we saw prices that moment continue to climb and find new highs. We had some more positions here. We had one had the breakout of the $2023 level. We also added another one had the breakout of the $2028 area during the New York session yesterday before we were taken out of all the positions. I did give an update as regards to the structure during the New York session yesterday, where I said we should move all stop losses, secure the current position, and if you had done that, you must have been taken out with a minimum of about 150 160 pips depending on where you move your stop losses to. And for those of us who did, well done, and kudos to you for being on standby to capitalize on this move. Now, if you remember what I told you yesterday, I talked about how surprised I was that price was finding higher highs and higher lows this week, especially when all factors on all fundamental factors is supporting the ascent of the US dollar at that point. And I did mention, if you remember, that we may likely see a build-up that is intended to shake out a lot of buyers in this market before the price of gold will crash. And look at what we are seeing here. As soon as price got into that zone around the $2032 area and the 2028, we begin to see how it has become difficult for buyers to continue that momentum, hereby giving us a potential reversal pattern at this point in time. And I did mention that we are going to be selling any form of reversal pattern on this asset if we find one. And during my commentary this morning, I did emphasize that we will be selling below the $2028 area. I told you, I emphasized that throughout the course of this week, the US dollar has struggled to assert itself. However, the failure of price to breach that zone around the 2008 and the $2028 area may prompt some profit-taking activities ahead of the FOMC meeting minute, potentially facilitating a rebound for the US dollar. And coupled with the fact that the US Treasury bond yield is doing very well, and of course we know how related the US Treasury bond yield is to the US dollar, I think everything is looking bearish at this particular point in time. And though it is important to also emphasize here that market participants will remain very cautious in making any aggressive directional bet at this point in time, waiting for clues from the FOMC meeting minute, which of course will give an insight into the Federal Reserve stance on interest rate cuts for this year 2024. Now, with the situation we have here from a technical standpoint and the inability of buyers to break out of both the with the zone between the $2032 area and the 2028, for me it makes quite a lot of sense to look out for selling opportunities at this point. And for those of us who did had a sell stop order to capitalize on the breakdown of the $2028 area, well done and kudos to you for capitalizing on that move, as you will currently be running with about 22 pips in profit. And please ensure you have your stop losses right above the previous high at the 2032, which will be dovetailing to about 40 to 50 pips depending on where your entry point is. So at this point in time, let's maintain a bearish bias and hope that price action will continue to the downside. Now remember, price is still above this ascending trend line. This is a very rare case we have here. We're definitely going to be adding more sell position at that point in time, as price action would have broken down the ascending trend line to further emphasize the strength of the sellers at this point in time. So let's trend move. So if price comes back into the structure, we shall look out for reversal setups here to join a decline to the downside. So for me, I'm holding on to a bearish bias at this particular point in time. However, in as much as we are looking out for selling opportunities, you know how we do it in this community, we also want to keep tabs with the possibilities that buyers could take over this market too as well. And if we are going to be joining the idea of an uptrend, where do you think is most appropriate for us to capitalize on an uptrend move? Of course, if you have been with me for a while now, instinct should tell you the right thing we are going to be doing. Of course, we want to see price action take out the highest point for this week at the $2032 area, taking out all the sell positions within the zone around the 2032 and the $2028 area to give us that confidence we need to join an uptrend move. So with that in mind, we shall be having a buy stop order above the $2032 area to capitalize on any bullish opportunity at this point in time. But I doubt if this is going to happen today, but if it does happen, let's be on standby to capitalize on that move. So basically, our center of focus today is between the 2032 and the $2028 area, where the direction of breakout will decide what our next line of action will be. Now that price has broken down the 2028, let's maintain a bearish bias at this point. And if anything new comes up along the line, I will definitely give you updates on both my TradingView and Telegram platform. So with that being said here, I think we have come to the end of the Forex Morning Mastery Wednesday's edition. But before we round off on today's edition, let's see if there are any questions. If you have questions or you need some further clarifications as regards to the setups we talked about today, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds off to see if there are any questions, while you also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. And please, I will appreciate your likes. We have 5 likes already. We have over 15 people on board at the moment. If you have found this content helpful in making your independent trading decisions for today, I would really appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial. This is the cheapest and only way you can support this channel, and I really appreciate as you do so. Thank you very much, guys. And for those of you who had already clicked on the like button, thank you very much. So with that being said, let's see if there are any questions before we round off for today. So I'm taking the 5-10 seconds off at the moment. Hello, Princess Abulokwe. Good morning to you. Glad to have you around. Sure, you can still watch the replay of the live session after the session. You have access to watch the replay. All right. Glad to have you around with us this morning. Okay, I see your response, CIS. I'm glad you found that useful. Okay, that's great. Thank you very much. All right. So, in the absence of no further questions, okay, you are welcome, CIS. Thank you very much for the support, CIS. All right, so in the absence of no questions, of the opinion that we have come to the end of today's Forex Morning Mastery session, where we shall be getting prepared for the London and New York session today. It has been a wonderful moment with you guys, as I really appreciate every single moment I had with you. And in fact, we were able to take on 3 assets on our watch list for today, which includes the USOILSPOT, the USDJPY, and of course the XAUUSD, where we were able to identify simple trading setup using our basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action today. And I do hope you all marked out these levels accordingly as we discussed during the course of the session. If you have done so, well done and kudos to you. So all we just need to do at this point is to exercise patience and allow the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding, let's ensure we have a well-defined risk management strategy in place to mitigate against any risk on our portfolio. So with that being said, and for those who are joining us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. If you did, well done, and look forward to seeing you tomorrow. Trust me, the more time you spend with us in this community, the better you get to understand how our analytical approach works and eventually be able to use the information gathered here to make your own independent trading decisions. So I look forward to seeing you guys tomorrow, same time, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing and at the same time prepare ourselves for tomorrow's trading session. And that reminds me, I already dropped the link to the XAUUSD live window session right in the comment section. It's pinned at the top of the comment section. You can click on that link, click on the notify me button so you can get notified as soon as we come on live. For those of you who do not know, the XAUUSD live window is a platform where we come together to monitor real-time price action on the XAUUSD during the New York session. So it usually kickstarts about 5 to 10 minutes into the New York session. So you want to be part of that session to see how we manage our positions on the XAUUSD. So it's on this note I want to wish us all the best of luck today. Thank you very much, guys, for your support, and I wish us all the best of luck. And trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.